Well, after January's hot start to the year for stocks, many were left wondering, can this market keep rolling? The answer in February was, yes, it can. In this morning's Economic 360, Mike Denneman, Senior Vice President of U.S. Bank, discusses why stocks have been on a roll and if anything might trip them up. He's with Kelly Snyder, Market Engagement Director for the Business Courier. Mike and Kelly.
Mike, thanks so much for being here today.
Good morning.
It sounds like this was a great month for the market.
It was. You know, we talked just a couple of weeks ago about how strong the start was in January, and everyone wondering, can the market keep that momentum going? And as Peg said, we know, yes, now it can. So through the end of February, U.S. stocks are higher by about 11% to start the year.
Wow.
So to put that in perspective, that's the best start, the best two-month start for a year since 1987. And so that's a pretty remarkable number, right? And so February's gains were not quite as strong as January's, but still, that 11%, keep in mind that an average year for the market is 7% for the whole year. And we've got 11% in just 8 weeks. And so that's pretty remarkable.
Sure. So what has investors so upbeat?
Yeah, it's been a pretty cheery year so far for investors. There's been a lot to be, excited about market-wise. I think probably top of the list is the Fed. They did raise rates in late December, which, as we know now, probably not the best move they could have made. They did make amends for that, though, right off the bat in January. They backtracked pretty quickly on their plans for 19. They had planned on 3, maybe 4 more rate increases. Now they've revised that to maybe 1, if that. And so that's got investors excited. Put on top of that, fourth quarter corporate earnings. We just saw those reports. They were by and large very good. The government shutdown is behind us. We might get a trade deal with China. So all of these things are very good news for the market, but you put them in a short period of time, and yeah, the market's really going to pop.
So I almost hate to ask, but is there anything that could ruin this party?
So that's a great question, and really something that investors should be keeping in the back of our minds, right? Because to expect the market to keep putting up gains like this month after month, that's not realistic. That's not how the market works. In fact, a lot of observers now saying, whoa, the market, we might expect it to start cooling down because it's been on such a hot streak. So we know investors are in a good mood right now. But we saw as recently as December what happens when investors aren't in such a good mood. So, any of those things we talked about just a second ago could go the other way. Maybe we don't get a trade deal. Maybe the Fed doesn't stay on the sideline. A million things out there could come in and sort of upset the apple cart. And so, on one hand, the market has had a great start to the year, and we're certainly glad to see that. But on the other hand, we need to be realistic and sort of keep our expectations in line with what we typically see and not expect this to be, this isn't going to be the norm for the rest of the year.
Sure. Well, can't wait to see what March brings.
We'll keep you posted.
Thanks again so much for being here.